Hi folks, Nick here recapping the day. This is Monday, June 1st. Yay, for a new month. Somewhat disappointing even though we finished green, but we left a lot on the table, we as in the bulls, if they want to consider that as the collective market. First of all, the pre-open showed such promise because of, the anticipation of the rumor. There wasn't even a rumor. People talking about possible rumors ran up the market, so you can see the rise up to here. And then we opened to new lows, even lower than on Friday, which was really disappointing, but then quickly recovered. This is the S&P. Recovered to new highs, but fell short of the technical target I had for the day, which was kind of disappointing a little bit, and then closed on the weak side. So let's go back to the 1 minute to show that the close was on the weak side. Apple kind of like played it perfectly with regards to intraday, just looking at it. It did the expected, also closed on the weak side. Trying to pick as to why we're moving. No reason. We're just anticipating. And it looks like trying to find what variables are at play. I still peg it the most important driver these days is currencies and how they affect the global markets. And I can pinpoint it down to now basically the yen inversely related to the markets, just like we had a couple of years ago, last year, I think. So strong yen means lower markets and vice versa. It used to be also with the bonds, and bonds were down so hard today, and then they recovered. So that leads me to believe that maybe the bonds and yen are going back hand in hand to work inversely with the markets, but not quite. Nothing is committed 100%, so we can't say anything. For example, we're not even committed in the oil. This is oil. They opened low. They showed a low hand pre-open, and then rose into the day, and then red, and then closed just about flat. So there's no commitment anywhere. The SPY, this is what we're looking here. That's the S&P longer look. That's about 20 days, maybe 10, 15 days. You can see how we're drifting lower, but we're also setting some baseline here last few days. So we want to see if we're squeezing into a move. Why do I say that? It means leave room for error, because all we need is a trigger, and we're wound tight to move one way or another. So you got to leave room for error. So if I'm nervous, like last week I suggested an iron condor for active traders that wanted to trade 207.5, 215, the range on the SPY. Today it's about 25% or so of maximum gains, and it went back and forth, the gains being from the lower side or the upper side, meaning the bullish side or the bearish side. So if I'm nervous about it, I can close out of it for a little bit of green or even money, and just replay it next time with a little more clarity. Why do I say that? Because this week is heavy. We have a lot of things going on. We have Mario Draghi speaking, and I think Merkel also, and somebody else, I can't remember now, it escapes me. We have a lot of economic data coming out. Wednesday we'll get a jobs report preview from the ADP. May or may not be accurate. And then later in the week we have the actual government numbers, and you can rest assured that markets are going to be focusing on those numbers. We have all kinds of other economic indices coming out between now and then. So we have the potential to move. We have the catalyst that will potentially move. And we also have the ever-present potential of a rumor, or even a threat of a rumor, which is pretty hilarious today. The NASDAQ, same deal. It showed a lot of promise, but then fizzled. You can see, and then quickly recovered to the highs and then fizzled. So compare it to Friday. Look at where we are, exactly in the middle. Compare it to Friday. We're right about the middle. Small caps, they went from leading up 0.65% to leading down 0.4% or something like that, to leading up 0.65%, then fizzling. And compare it to Friday, we're almost in the middle. So nothing happened since Friday. That's basically it, what we're saying. The standoff still stands exactly where we are from the pre-open levels that I shared this morning. So everything spills over to tomorrow. Tomorrow before the open, I'll send out the new levels. So until then, we haven't done much. So let's look at the candles real quick. I like to do that. This is the SPY. I should have stayed there. Let's zoom into about 6 months, so we can see the candles better. You can see we're still right in the middle of Friday, right? Volume just as big as Friday. That's important too. That it's not like everybody's out. This is a bullish candle on the NASDAQ because they tried to go down to here, but they rejected it and they closed higher. Not quite at the high, but higher. That's a bullish candle, and on volume for the NASDAQ. I'm sorry, where are we at? IWM, small caps. Like I said, they led up, then down. They led up, then down, then recovered. NASDAQ next. Kind of like the IWM, that's why I mistook both. They rejected the low, close towards the high, not quite at the high, but this is a bullish candle, kind of like a hammer, like a sledgehammer. So it's a bullish candle, and we're still squeezing. The move is coming, either this way or that way. And what is the catalyst? That's basically the question. I think the fight lies here in the small caps because it's a line in the sand, and if the bulls win it, they have a lot of places to run. 127, which is the all-time high that they haven't revisited since here. And that's the only one that hasn't revisited the all-time high. So this is where the fight is. So I have 4 things on the schedule, right? I've talked to you about that for the last couple of weeks. We have, first of all, currency now, small caps battle. Apple, obviously, always a heavyweight, takes markets left and right, up and down, I should say. And financials, which are less important today for some reason because we're not focusing on rates. So if rates move, they did move up today, but that's not what's driving the markets. Markets are moving on currencies, in my opinion. You can find somebody else to say something else. But anyway, everything spills over to tomorrow. I do have a few names to look at as far as specific tickers. Question came about Sienna, doing an iron condor in Sienna. It was too tight for my own taste, so I said I'd avoid it because of it's a volatile name and it's rising. I want to see it prove to me that it can enter here. Like it's failed every time it entered here. This is 2 years worth of movements. And recently I see it, if I zoom in back to 1 year, I see it like it's got an established price area. Consolidated area. Now we have a rising, a sharp rise, breakout from here. Now it's coming back to here. What's it going to do now? Okay, so I want to look at that before I can commit. I also came across my mistake on FDX. Look how tight it is. Look at the range, how wide it was, and look how the range is tight. Also, it has earnings coming soon, right here. So, if they played their cards right with regards to fuel and their P&L looks really healthy and they don't poo-poo the going forward statement, they might be able to revisit their recent highs. I'm just saying. So if somebody wants to play on the long side from now, start building a long position just for a lottery ticket, I don't blame you. I don't like to take full positions into earnings. Also, for some reason, I have to look at LinkedIn. Timely bounce. Today's candle is great. I still need to see it break this area. It's an important area. See? Boom. It comes back to it. This is like same setup here. So let's see what happens. I'm not so optimistic this time around, but hey, anything can happen. Disney also was mentioned today, so let's see it in pictures. Disney breaking out, but again, it's been here a couple of times before. Even the beautiful earnings that they delivered here, they couldn't hold that green line. Let's see what it does now. See how everything is lining up nicely. ISRG, I don't trade it anymore. I used to. Today's candle was a nice pop, but it couldn't hold it. So let's see what it does now. It could be that if it comes back down to here, a head and shoulder, complex head and shoulders. It avoided the head and shoulders that would have brought it down to here, 460 in my opinion. This is shoulder, head, shoulder. Technically speaking, fundamentally, I don't know much about it anymore. And but I'm just saying, if you're long it, you might want to be aware of that. A lot of people trade technically, and they start. It becomes a self-fulfilling prophecy. Only fair enough to visit Bristol-Myers just because of the big candle they had on Friday, downward candle. Today, yes, green. But look, it's still dwarfed, and it's an indecisive candle, meaning They opened, they tried to run, they tried to sell, and they came back and closed it about where they opened. So it's worthy of another day. Good volume, though. That's a pretty good statement, that it didn't go down further. People are trying to catch a falling knife. Let's see what happens the next day. All right, Nick signing out. If you have any questions, let me know.